welcome friends that we are at the verge of last module of international trade theory and empirics. Now, as I already mentioned that we are running through a major crisis in the international economy. In the world over, the economy is reeled under major pandemic, that is COVID. So, initially in my lecture I structure for understanding the trade and development for developing country and India's position in the last two lectures of the entire module. But now I think the need has come to explain the post-COVID experiences and how India stands in between. What kind of policy strategy India must adopt to explain or to tackle the problems of COVID. Through the international trade explanation. Now, let us go further and explain one by one. So, this will be continue, this lecture will be continue for 15 to 20 minutes, then another lecture will be a continuation of this particular module lecture on post COVID experiences. So, now to count that countries experience the crisis and facing serious consequences and damages to due to COVID. In its recent forecast, WTO World Trade Organization indicated a clear fall in world trade between 13% and 32% in 2020. Perhaps the highest fall since Great Depression of the 1930s. This is pointed out by a report by Professor Prabir Dey of RIS. In a report, recent report they have come up with, and they explained how the economy is trying to coming out of the pressure of pandemic. So, the WTO forecast of 13% to 32% I think is highest ever. Even in the Great Depression there was not such fall. So, WTO also predicts that the mercantile sector, that is export imports of the mercantile goods will will have a complex value chain linkages. So, in that sector we will talk about electronics and automobiles. They are likely to be hit the worst. Okay. So, electronics and automotive sector I think we have already experienced before the pandemic sets in Indian economy, especially automotive sector actually got the hit. So far as the IMF forecast is concerned, this has also given a growth forecast for Indian economy, projecting a GDP growth rate of 1.9% into 2020. I think the growth has even reached negative. So far we have seen in the first quarter it was minus 23.9%. In the second and third quarter it has compensated. To a large extent, it was around again minus of 2 digit around 10%. So, the major packages that have been announced in this regard are important to understand the Keynesian prescription of the Great Depression period. The major packages almost all the countries announced, but those are called the stimulus, and this stimulus is similar to the traditional Keynesian prescription of pump priming, whereby income transfers to people having higher marginal propensity to spend can boost off the sagging demand. The sagging demand, the slowing demand could be from pump prime through the stimulus packages that has been prescribed and adopted by countries in the world. Now I am citing as a backdrop to the growth path of the recent experience due to COVID. We have already given a trend of analysis in the very beginning of our chapters. In the very first week we explained about the growth, trade, volume of trade, India versus other countries. Now the recent economic survey report has already been published in 2 volumes, volume 1 and volume 2. Now I am referring to the Economic Survey volume 2 and chapter on international trade, that is external economy, where I am now explaining trends in growth of world output and its trade volume. So, they have calculated for and compared for 2012 till 2021. Now, look at from 2012, it was a recent period after the financial crisis, bubble crisis of 2009, 8, 9. Then the country steadily moved off, but later on from 2013 onwards, 13 to 14 onwards, again there has been a fall in terms of the world trade volume in goods and services as by the IMF report. And the line diagram that is in red color explain the world trade volume in goods and services. World output as per the IMF record in vertical bar diagram has also shown a sluggish growth rate. Now, especially from 2018-19, there has been a negative growth in all the indicators. In 2020 till 2021, it is seen that the rate of change is hugely negative. It is minus 9.2 for 9.2 and minus 10.4 for world trade volume in goods and services as well as mercantile trade volume. Okay, so that is that is in terms of annual percentage change, and in the next explanation we will go for understanding trends in world mercantilized trade. For exports as well as imports from 2016 till 2020 up to the third quarter, the source is also given in the economic survey report from WTO. So, I am citing those reports, and this is for, these are collected for your better understanding of the COVID situation in the world and India's standing. Now, in 2016 up to 2020, I think in almost all the regard exports, India's in 2020 as compared to other. Now, India's figure is mentioned at the latter part, it is here. Now, India, this is Indian figure in export and import. Now, you can see 2016 there is a negative figure, 2017 is a positive one, 2018 again positive, 2019 it is near about 0. So far as export is concerned, in 2020 it is huge negative exports. And so far as imports is concerned, during the same period in up to quarter third, import is negative in the first period, then positive, then in this case also import is negative because trade has been hampered hugely. Okay. Now, coming to the explanation of mercantilized trade balance regarding export and imports, we will have the explanation for trade balance, exports, then imports. This is divided for quarter 1 till quarter 4 in 2018-19, 2019-20, then 2021-20, 2020 and 21. This is from the source called Department of Commerce of Government of India, and here we are mentioning on one axis it is US billion dollar, then another axis we are writing as growth rate, year on year growth rate in percentage. Now, you just mark that imports is in a line diagram explained with green color, then exports in red dotted line, then trade balance in vertical bar diagram. Now, in all the quarters, so far as trade balance is concerned, it is negative. Okay, it is very huge in terms of US billion dollar. Then that is 49.2, then again minus 31.2 as per the latest quarter. Okay, so lockdown is given and is written here in Q1 period, that is from March 2020. Now, So obviously imports and exports both have experienced a fall. But the import fall is higher than that of a fall in the exports. Now explaining the commodities in which India's mercantile trade balance has been favorable, especially in the period 2019-20, then in April to November, then as compared to April to November in the next year, that is 2020-21. Okay. So export we are mentioning here, then import we are mentioning here, then the last two columns are for the explanation of trade balance. Okay. Now, let us check quickly for the trade balance in US billion dollar, that is comparing by product, as I already mentioned. The data is from Department of Commerce. Now, out of the top 10 commodity categories, first one to count is on drug formulation and biologicals. I think this is the one which has been referred in this period hugely on medical equipments, medical products. So, drug formulation biological one, I think so far as trade balance is concerned, it is positive hugely, and it is expected to be positive. And India has a larger share in the export basket. India is one of the largest manufacturer of the pharmaceutical drugs. Now, in marine products, it is also positive. Gold and other precious metals, jewelers, it is also positive. Then cotton, accessories, cotton fabrics. Then I think related to iron and steel, it was negative, but again changed to trade balance as positive. So that means the export is higher than that of import. I have already mentioned very clearly from the beginning that our import distorted hugely, but later on when import distorted in one period, that has led to further distortion of growth path in the next period. There is a lag effect, because usually India takes imports of raw materials for its value addition. If those are distorted, in the next period there is a possibility of deceleration. So that is the reason why almost all those top commodities have shown positive trade balance. Okay. Now, coming to the mercantile, India's mercantile trade balance which are unfavorable. So we have shown the products which are favorable. Rice, basmati rice, petroleum products, iron ore, steel, these are top 10 products which were favorable so far as COVID period is concerned, corona pandemic is concerned. Now, here we are mentioning those are unfavorable which have been hit hard due to the COVID period. Now, to count at the top is the crude petroleum oil. So, petroleum since import was distorted, all the operations were distorted due to lockdown period, that has went especially went huge negative. It is minus 68, then it again minus 31.2 US billion dollar. Then gold sector, then coal, coke and briquettes, then telecom instruments, then also electronics components, vegetable oils, computer hardware as well, fertilizers, plastic raw materials, aircraft, spacecraft parts, etc. So these are the bigger industries where India's trade balance has been distorted hugely. I will take up another two slides here. Then then we will go to the next class. So now India's mercantile trade balance with major countries. Which countries have been affected much so far as trade balance is concerned? Here we are referring to the countries, not by the goods or commodities. So it is in favor. It is actually USA, which are in positive. I will explain now. Then USA positively affected, Bangladesh positive, Then Nepal positive, UK positive. Nepal of course is our neighboring country, so it has not affected much, though there were little crisis for short period due to the border issue for some time, but that has not extended to a long period. Then Netherlands positive, Sri Lanka positively affected, then Turkey. But these are other countries which have experienced negative trade balance with India, like Qatar, South Korea, Indonesia. Obviously the petroleum dependency countries where we used to take crude petroleum, like Saudi Arabia, then Qatar, then to some extent Turkey, Iraq. Okay. And due to the international crisis initially started with China, so and major countries in the world have started raising concerns for Chinese goods and Chinese products. So there has been also some negative impact on Chinese trading. So in the next just a minute, I think I will talk about the RCA approach and its explanation for the world trade from the next class. I should stop here, then we will continue this post COVID experience for trade and development of Indian context from the next class. Let me stop here. Thank you.